Hi everyone, good afternoon, and thank you for being here and welcome to everyone. Thank you for being here every week and hope you are all doing great. I think we can start our session for today. Today our host is Robert. Robert is taking over from Moonlight, and I hope we have a great session together. And if you have any questions about all the 6 stages of Moracle Accountancy Formula, you can wait for the last 10 minutes of the session, and then you can ask your questions. Also, we would like to see all of you so we can have an engaging training. And we can turn the camera on, or you can also be aware that our sessions are being recorded and they're going to be uploaded on our YouTube channel. So yes, be aware of that. And thank you to you, Robert. Hope you have a great session. Thank you, everyone.
Hello, good afternoon, everyone. And thank you very much for joining in today. I'm standing in for Molai. My name's Robert Sevagala, and we are going to continue with the stage 5, which is reporting. And I'll continue from where we started. I'll have a bit of a recap, and then I'll go to stage 5, where we are going to look at the initial engagement with an audit client. I'll display the Moracle formula. Yeah. Okay. Yeah, once again, like I said, welcome. The Moracle formula is a formula which Molai has designed. And whatever we do in Moracle is done within this formula. And if you learn all the stages of this formula, you are likely to be able to do very well wherever you go. Because this covers every aspect of accountancy. And for some of you who have worked in different places, when you learn this formula, you realize that certain things are very, very easy or made much simpler by this formula. That's why he always insists that learn all the stages and in that order, especially stage 1. The stage number 5, reporting, what I'll be talking about, you realize that it very much connects with stage 1. And if you've done stage 1 really, really well, you are going to be in a much more safer place. So what really happens when we engage with a client, with an audit client? What do we do? How do we get started? How do we find out what they do and how they do it? So already thinking about that, you start feeling that stage 1, that background information. Because how do we get started? There could be a proposal drawn out. There could be a pitch done because there are other people who are tendering for the same client. So we've got to do that. But before we do that, we've got to find out, we've got to do some background information about this client, which here we'll do in stage 1. So what's the client's mission? What are their values? What are their objectives? Because that way, we are going to work out whether we have the capacity to do what they deal in. Because if we don't have the capacity to do what they deal in, then there's no point of even writing a proposal. There's no point of even pitching. And Once that is done and done properly, and we are chosen by the client, we'll have to meet up with them. But we need to make sure we know the mission of this client, we know their vision. We might not know the depth of everything, but at least we've tried to search and find out their objectives, which here we learn in stage 1. We've got to look at the organization chart, see who are the directors, who are the personnel, and if we can, what are their qualifications? Because we want to find out the people we are going to be dealing with. Are they qualified? What's their experience? What are their relations? Because if somebody has a bad report somewhere, that is going to affect us in one way or the other, because we need to find out a bit more information. There are so many people who are going to rely on the reports we produce. And if we produce a report which is not complete, or which misses a few things, and certain things are maybe obvious, then our integrity is going to be affected. So it's really important we try to understand that organization, the organization chart, who is the chairman, who is the CEO, and who are the finance people, human resources, and the connection in between. Is the CEO the same as the chairman? Because when you go back to corporate governance, if the CEO is the chairman at the same time, that raises a few questions. It doesn't mean that whatever they are doing is very wrong, but again, it should be looked at carefully. And what's the balance like? Are they only old people? Are they a mixture, old and young? Are there women and men? That sort of stuff. So all that helps you to try to understand who you are going to deal with. Then the other one is the activities they deal in. Are they, what do they do? Do they sell stuff? Do they deal in coffee, for example? Or do they deal in guns? Guns is a business as well, but if they're dealing in guns, where do they sell them? Because at the end of the day, if whatever they are dealing in is wrong, which maybe leads to treason, again, you don't want to get involved with such people. That's why it's really, really important you understand the activities, the services, and the products they do offer. Again, like I said, if certain things are not found out before you get started with them, that means you are not doing your work properly. And that's why here we insist that that background information is very important. Now, when you have a template, when we give you a template to do the background information, it's okay and it's fine if you find out maybe on the website and you just list what like the activities are. But that's not enough. There's a bit of a depth you need to go into, trying to assess, okay, they are dealing with this activity. Who are they working with? Who are their stakeholders? In which countries are they dealing? Because there are, some years ago, there were some countries which were bad that, and our passports, some of our passports would read, you are allowed to go to all countries except country X. Now, if business is being done in country X, again, you feel maybe that's not the right path to take, that's not the right client to deal with, then you'll have to look at the chart of accounts. If it's available, certain information might not be available, but if it's available, try and find out what's their chart setup. How is their chart set up? Are the classifications done properly? Do you agree with them? Because you, as the auditor, you must be very well equipped with the procedures and processes. Obviously, there are guidelines. You might not know each and everything, but you need to read the processes. You need to read the guidelines. You need to work with your team because you will not know everything. And then you are going to look at, say, their budgets. When you look at their budgets, it might give you an idea of, say, the going concern. It might give you an idea of whether they are going to progress or they are not progressing. And that starts building up your questions, which you will ask before that meeting gets started. And then if you can find the account somewhere, the transactions, then again, you can look through them and you are going to see, especially if you compare different years, you are going to compare and say, well, that year they did like this year they are doing like that. Why would that happen? Why is there such a big difference? Why is there such a big variance? And all those questions, before you meet the client to speak to them, you already have them in front of you. I don't know whether there's anything you want to ask at that point or to add on. Just feel free to put up your hand and I'll give you an opportunity to complement that. Now, meeting the client, what are we meant to do to meet up for the very first time? Before auditors would go to the offices of the clients, they would go to the offices and talk to them from there. But in Moracle, what we do is we do it online because clients can be anywhere in the world. We do it online, we'll do it on Zoom. If there are exceptional circumstances, yes, you can go to their offices, but it's made much simpler when it's done online. So after being accepted by the client to do their audit, then you write out an agenda and you send it to them. And you agree the time you will meet and how you are going to meet, whether on Zoom or whatever technology you are going to use. It could be Teams or Zoom or something else. And then you're going to tell them the team you are coming with. Most of the time, they'll tell you the people who are going to be in the meeting from their side as well. And while there, you introduce yourselves, you talk about yourselves and who you are, if you are the CEO or audit manager or partner, and then they also introduce themselves to you. I tell you, it's mostly going to be people from finance. On a few occasions, the CEO might be there, but mostly it's going to be the finance people who are you are going to be dealing with as you do your audit. Remember, you've already done your work. You've done your background information. But they've also done some work on you because they don't just get anyone. So they've also read, they've gone to your website, they've gone to your LinkedIn, they've seen maybe your qualifications and that sort of thing. So this is why it's really important in a professional capacity to be very mindful of what you post online, because this is the easiest way people to find out who you are, what you do. So it's best you put something relevant, something professional, something which does not, which brings up your true picture. Because if you just put on anything, then obviously they are, I mean, straight away as they look at you on Zoom or physically, they say, well, is this the guy or is this the lady? Come on. I don't think she has what it takes, even when you have what it takes to do this job. And what's the first point you are going to talk about? It's basically going to be about the engagement and the anti-money laundering documents, because you are going to request that they give you certain documents which will prove to you that the people you are faced with, the people you are talking to, are the very ones. Here in the UK, mostly, it's going to be somebody's passport. Because your passport, you cannot have more than one passport. I mean, or in different names. You can have more than one passport because some people have dual nationality or other nationalities. But what's in one passport is what should be in your other passport if you have more than one. And the passport is a very, very key document which is requested most of the time to prove it's who you say you are. Then the other one is going to be, say, a bill or like your rent, your mortgage, your telephone bill, because that has your personal address. It will have your personal address. And it's difficult to have a mobile phone or a landline in a different place. So if you do produce those ones, then we do have some sort of reliance that, okay, this is the person, this is Robert. He says he lives at this place and his bills are here in those, in his names and that particular address. And those names are the ones which are in somebody's passport. So before we can have that, we cannot even issue an engagement letter. So that's the first thing we'll discuss with them and say, we'll need this information from you. Obviously, they are going to say yes. But when you go back, you've got to wait for them to come through before you can send in an engagement letter. Because when you send in an engagement, when you've not seen that, in case it turns out that they're not the people you are talking to, then certain other issues are going to come in. So that's what we do first. We request them for that anti-money laundering documents, which would be, say, your passport or your bill. Then after discussing that, because they are going to ask you, oh, why do you need it, blah, blah. And you're going to explain, oh, yeah, we need it because of A, B, C, D. This is why it's required. And then you are going to go to the next point, which will be the accounts, say the management accounts. As you very well know, the management accounts are prepared once a month. And when they are prepared, they are discussed with those responsible for governance. And then they are going to find ways of how to go about business. So it's important you request that. And when it's given to you, you've got to read through it and see the deliberations, because all those bring hints how the business is run. Like here we normally say and it's true that auditors have to be skeptical. That doesn't mean you don't trust them. You don't believe them. You do. But you've got to be skeptical to find out a bit more. So from the accounts you can read, but also you are observing the other things which go on in business. So what they say here, is that what they do? Or what the comments, whatever comments have come up from the management accounts, have they dealt with it? If there were big variances, have they dealt with them? If there were weaknesses which were identified. Because every time you look through the management accounts, it draws a picture of where your business is and where your business is going. And obviously, if you are responsible for the management, for running the business, then these comments which you are going to draw to the attention of the other members of the team, of the other managers. After discussing that, you're going to pick lots of knowledge from what they say, and as you discuss, you are documenting, you are putting down, you are seeing the weaknesses or you are seeing the positives, which you are going to examine later. But at that point, you're just listening and you're asking questions and they're answering, and you're all happy because, yeah, it's a conversation. You haven't found anything. You are just chatting to them and they are giving you their side of the story. Then the third thing will be the activities they deal in. Remember, you've already done your work in stage one. You've done some background and you know the activities. But maybe what is shown on their website is not everything, or is there just bits and pieces. This time you want to hear from them. So you are going to ask them about the activities, what they do, and how do they do it, and which ones are much more profitable, that sort of thing. So they are going to tell you about the activities. Oh, we deal in this and we deal in that. You are going to realize that certain things maybe which you knew or which you didn't know are going to spring up from what they discuss with you. And then you are going to ask them, okay, so do you think you are going to continue that way, or are there any other changes to the business? Are there any new activities you intend to go with? And you are looking at their incomes as well from those activities. Some could be doing really well, some could not be doing very well. But again, it's from them. They are just telling you, you are just asking a question and you are documenting, because when it comes to looking at the real stuff, you are going to relate to the conversation which you've had, or it's going to help you to request for more information. Say, if they say, okay, we have a new product which we are going to introduce on the market. So this is something new. Now you are going to request for information. Okay, so how come you have this new product? Why do you think it's going to do very well? And then they are going to produce the calculations, which you are going to look into. And then again, your skeptical mind comes in. Is it something which is acceptable? If it's something acceptable, why did I not find it online? That sort of thing. And so many other things which it can come about. If it's produced in a certain place, are they going through the right channels to produce it? Who produce it? Do they get paid well? There's so many things which can come, in your mind. Some are going to be applicable, some are not going to be applicable. But it's that skeptical mind which you have as the auditor. Then you are going to ask them about their customers and maybe their suppliers. So for example, if you have a customer, I don't know what sort of customer, school, for example, you are supplying, suppose, or if you have a factory, you are supplying stuff. And if you rely so much on that factory, most of the stuff you supply goes to that particular factory. In case it fails or in case it stops operation, what would they do? So you are looking at all that. You ask them, who are your customers? Who do you sell to most stuff? Or who are your suppliers? Where do you get most stuff from? And what are the credit terms, for example, they give you, or what are the credit terms you give to the people you supply to? Again, you're documenting before you even, before you look into the books, before they give you the books. They might not even have some of these answers there and then, because some people, every other company, the way they work is different. But go ahead and ask the question, because that is going to help you when you write a letter where you identify the weaknesses. And if you are doing them for the second time or for a second year, then you will relate to the weaknesses which you identified in first year and say, come on, we found out this last time and we asked you to do A, B, C, D. Have you done it, or are you going to do it? And if you are auditing a customer who you had audited before, again, you already have that in process, in line, and you say, okay, last time this is what we talked about. How have you gone about it? Again, it's a bit of a casual, but you bring it out and they are going to discuss with you. They are going to tell you what they've done about it. But again, when you think about it, it still falls in the management information systems or stage one, where we do the data capture, where we do the recording, where we do the analysis. And these are really, really key things. They look like simple, or they look like a lower level, but it's not, because if they are not done and done properly, then there's going to be a very, very big issue. So it's really, really important. You see, it's stage 5, but again, we are looking back to stage 1 to get that information. So if they've not done their stage 1 properly, then you are going to look at the contracts as well. If they have any contracts with a customer or contracts with suppliers, and the likelihood of satisfying those contracts, And if they fail to satisfy the contracts, what are the consequences? So these are things, again, which you can discuss with them. You bring it out and you ask them, they're going to give you a full story. Say, oh, yeah, we have a contract with ABCD. We are meant to supply them for X years. And then you're going to ask more questions. Are you likely to make it from these figures? And then they are going to explain. Again, you are putting down. Remember, this is just the initial meeting which you have with your new client or even a client where you've been before. After that, you are going to speak about the systems and the processes and the staffing and how they get on with doing that real work. This brings us to stage one again, to the finance procedure manual. You're going to ask them, do you have one? Yeah, most of the time, many of them will have, but sometimes some of them might not have. Remember, you might not get to exactly what you want. But again, there must be some sort of system which they use. There should be some sort of procedure. You need to document this and you need to advise them. But now you are just finding out. It's just the initial stage. So what will happen is if they say they don't have, you go further and ask, so how do you go about A, B, C, D, and then they'll tell you, you've got to document that. Again, that is going to go in your other letters in future as you speak to them, okay, this was a weakness. You don't have this finance procedure manual. You need it. And the reasoning for it is A, B, C, D. So I'm not going into details with that, but I'm sure you get it. So you can, this is not an audit job, but you can offer to do a manual for them. But then that will be a different team, because if they cannot find anybody to do it for them, and it's a requirement, it's a necessity for them to run their business properly. So for you who are doing stage one, there are companies there who might require that, and you are going to do it, and you charge them a fee as well. So it's really, really important that you master or you learn properly the reasoning why we need a finance procedure manual and the necessary steps within the finance procedure manual, because it's a guide. It's very helpful. And even if at some stage they produce it, they give it to you, we as auditors, we read it. We read it from A to Z and try to understand it. And after reading it, we are going to ask them, we are going to ask the client how it works to make sure they understand what they've given us, because it's not good for them to get a professional to draw out one, give it to them, put on the shelves, but they don't use it. They must be able to use it. They must know what it says. And then you are going to do those tests afterwards. You are going to put it into practice and say, okay, here you say the authorization is done like this, the approvals are done like that. Can you show me where this happened, where you authorized, where you approved, that sort of stuff? And from there, you are going to go to the schedules, if they do have the schedules prepared, because to do the auditing, there should be those schedules, the directors' reports. Most of the time, they are going to be there and they've got to produce them and you'll have to read them. If they don't have them, then you've got to explain as to why it's a requirement or it's necessary to make the auditing much simpler or much easier. They might not want to make it easier or simpler for you, but it's required. And what happens if you don't have all these necessary documents is that the audit is going to take a bit longer, or it's even going to be much more costly. That's why it's really important wherever we are, wherever we work, we have all these necessary documents to help us do the work properly. Okay. After that, we'll go to the timetable. You are going to start working out from whatever they've said. you are going to start working out the timetable of how your audit is going to be done when you will actually start the audit. Because remember, after that meeting, we are going to send them a letter requesting the anti-money laundering documents, and we are going to wait for that to come. When it comes in, that's when we can send the engagement letter. So we are going to give it a time frame of, say, a week or even 2 weeks, maybe if somebody's not around. And once that comes in, for us, we are already ready with our engagement letter, and we send it. But then we are going to draw a timetable to tell them, okay, at this point in time, we expect everything we've requested from you to be in our offices, because we don't want to start when everything we require is not here. I think here we in our teams, you've seen that as well. We prepare accounts for certain companies, and there are delays because certain things are not yet in place. The auditor doesn't want to start when everything is not in place, because he'll keep going forwards and backwards, forwards and backwards. So that's what we also do in the auditing department. Everything, we do have checklists. We say we want A, B, C, D. We don't want to start before you produce A, B, C, D. And then we'll give, okay, sometimes they even suggest, oh, we are really very busy these days, but if you give us 2 weeks, 3 weeks, that kind of thing, even if it's a month, we can give it to them. But we want everything before we get started. And once we have it, then we start doing the work. We check this ABCD. We look into everything. But again, now and again, there are so many things which you might not understand as the auditor, because the accounts were prepared for 12 months. Then 3 months later, they did the management accounts, then the statutory accounts. So by the time you get in, there's so much work, there's so much information, there's so much stuff you need to read. And you must be ready to read these things and understand them, especially if it's a new client, if you're doing it for the very first time. Sometimes the businesses they're dealing in, say if they're dealing in IT, and maybe you've been dealing in maybe schools or a charity, that kind of thing. So there's so much work you need to do to understand it yourself. You won't be able to audit until when you understand exactly what they do, which takes us again to the stage 1, where the reconciliations have been done and done properly, where the recording has been done and done properly. Sometimes what happens is I see accounts sometimes, and somebody has put in a description and say, what can I say? For example, rent. And somebody just says rent, but has not stated the time it leads to, because some rent is paid for a year or for even 2 years. So they are likely to be maybe a prepayment, that sort of stuff. So if the descriptions are not done properly, so that's the recording there, the capture recording. If it's not done properly, again, when it comes to analyzing, it's going to be a challenge. And when the auditor is looking through these things, sometimes it goes back down to stage 1 to see exactly what was recorded before we can even get the document from where they took the information which was recorded into the system. So it's really, really, really important. I can't stress it enough that it's done properly to make work later much easy. It makes it easy for you as well, the one who has prepared it. Because if the auditor comes after 13 months since when you prepared the accounts, maybe in January, and he asks you something, you're not going to be able to find it there and then, and maybe you don't remember. But if you recorded it properly, it's very easy. He's not even likely to come and ask you because he understands it straight away. But if he asks again, it's going to be very easy for you to explain. And then after that, the timetables have been drawn up and they've agreed, they send in the staff, then your work gets going. But they need to agree to these dates, and we need to keep on reminding them that, okay, we agreed this date and this is where we are. But because of your delay in producing this, then the accounts maybe are going, the audit report is going to be delayed. But we don't mean that. We just warn them that if these are the timescales we've set, if you don't produce certain things on time, then there's likely to be a delay, and they need to understand. They need to understand that as to why you've set those deadlines. Then number 7 will be to do with company house, HMR revenue, and customs and filing. So we'll require the codes, the online codes. We'll ask who has been responsible for their filing. And then if there are any changes in, say, the directors and why there are those changes. And if there anything new to the directors need to tell us, because certain things are held by the directors, you cannot see them in the accounts. There are certain things which they know and you don't know unless they tell you. But later you can find out, oh, there could be something happening when the director didn't tell you. So at this point, we do ask them, and then they are going to tell you, and we are going to document and follow up depending on the weight of whatever that subject is. And then we'll move on to point number 8, which is the risk assessment. So the risk assessment here will include, say, the going concern and the cash flows. Going concern will have the accounts can show whatever you are dealing in and you are doing well, and the cash flows could be also doing really well. But we need to speak to them about it, and they need to tell us what their plans are like. Sometimes there could be, like, say, a court case going on. If they don't mention, or a likelihood of a court case, if they don't tell you, you are not going to know. And if the court case is maybe violating maybe a major rule, then it's likely that the company might not be able to continue as a going concern, but they can only let us know. If they don't tell us, then we might not know. But again, we keep on probing. So what do you think you are going to be like in the next 2 years or next 1 year? And then they are going to tell you, oh yeah, we are doing really well. And okay, are there any court concerns? Is there anything else we need to know? Especially when you go back to, like, the contracts, which I mentioned earlier. If you have major contracts, you've got to supply certain things, and maybe there are differences or the drought. Suppose you are supplying food and maybe there is a drought and the foods are, maybe the costs have gone very high. That is going to affect your sort of business. But it will depend on what sort of business. If there has been funding coming in and maybe the funders have stopped, or you've violated something, or even you've not violated, but they said they would fund you for maybe 5 years, and the 5 years are coming to an end. So you are going to ask them the plan. What's your plan now? If this has been your major funder, your major contributor to the receipts, which you use to conduct your business, and they are stopping. So what are you going to do? So they need to give us. But again, how are you only going to know certain things? Sometimes from your background information you've done, you could have hints which could spring up something bigger when you start speaking to whoever has come to the meeting, the people in finance or some of the directors. And then the cash flow. You are going to look at their cash flows and see, or you're going to ask them to give you the cash flows so that you go through them and see whether they do have enough money to keep them going. They can afford to make their payments and payments on time. Sometimes you can look at, they can provide you with the, what are they called? The terms they have with their different stakeholders, because all that holds a key to their going concern, as well as sometimes to their cash flows. And they need to, some of them might not even understand certain things, certain terms, but you've got to make it easy, you've got to make it simple, you've got to explain it properly, and allow them to ask questions and make it easy, as simple as you can. It's not a matter of life and death. In a company I worked in years ago, when the auditors would come in, so everybody would know that the auditors are coming in. I wasn't an auditor. I was working in finance. But even other people in the company sometimes, because it was an open office, when they're answering their phones and somebody's demanding, say, oh, we are very busy, the auditors are here. So everybody kind of uses that excuse. The auditors are here, the auditors are here. And some people really, really, really worry. But once you understand, the auditors are not there to crucify you. They are only just there to check, to give a view of how you've prepared your accounts for the various stakeholders as per agreement. So during that time, they would come in and they would speak to us, we would give them an office, they sit in there, start doing their work, and come and start asking for the files. Okay, can I have this file? Can I have the debtors file? Can I have the creditors? Bank statements, that sort of thing. But if you've done it properly, and we used to do it really, really, really well, everything would be filed properly. And after a few years, we knew exactly what the auditors would be expecting from us. So before they even come in, everything is already set. And then it was paper office. I mean, papers, we would have papers and files, because one file, I mean, one piece of paper, if it goes missing, that can be a very, very big issue, say if it's a substantial amount. But now that we are doing things digitally, it becomes really, really simple. It becomes so easy. And if you've done it very well in stage one, everything is attached into the system. So the moment you look at a figure, you don't have to go to the shelves to get the papers. So that's why I'm insisting, like I said before, that you are going to see that stage one is very, very crucial for stage 5 for the auditors, especially when the audit is just beginning. And the last one is about the banks. The bank, we've got to ask them about their banks, how many banks do they have, and if we can have the bank statements and the reconciliations and whether they are being checked regularly. And here, as we always say, yeah, it's important to reconcile those banks. In some places, they reconcile after a month, but some accounts could be very big. Reconciling after a month could take you a while. But if you could update, if this is what you deal with, and you could update your bank reconciliations like almost every day. There was the place I worked in, and I had a number of accounts and in different currencies. Yeah. It had the euro, it had the pound, it had the dollar, it had the rand, it had the naira, it had the cedi. And not only one, each currency would have a number of accounts. That can really be tough. That can be very confusing if you leave it to pile. But if you try and do it almost every day, you just check your account. Sometimes there's a transaction, sometimes there is not. Sometimes there are very many. The euro had lots of transactions, and the naira had lots of transactions because we used to deal with Nigeria. But the pound also, because we are in the UK, it had lots of transactions. But the rand, South Africa, we didn't have lots of information there coming in, and it wasn't tough. But if you go on a holiday and nobody covers you to do that, by the time you come back, goodness, yeah, you've got to spend some time to make sure you reconcile. So it's really important. So we mentioned that to them at that point, and also ask for a bank, they are called bank authority letters, which give us access to their banks to give us information, to give us as the auditors. Because we say that information from a third party is much more reliable than information you get from like the client himself. I'm not saying they doctor the statements, but hey ho, who knows? And being skeptical, we've got to speak to the banks themselves, but we need that authority. The banks won't give us any information until the client has authorized. Currently, in Moracle, we do have an organization called confirmation.com. So we don't have to go to the bank. We don't have to go to the bank anymore. As long as we've got authority from the client, we do contact confirmation.com and they are going to get us those letters. We've only just started it. We are about to get our first confirmations. So that also makes it much easy. You don't have to go to the bank and speak to them, and you are delayed, and who are you? And they've got to do diligence on you, that sort of stuff. But once you feed in the information into the system, it sends an email to the client that such an auditing firm wants this information. Do you agree? Now the client will approve or will sign whatever they do, and the information comes back to confirmation.com. And then confirmation.com will find that information for us and send it. So what we require is, say, at the end of the year, a financial year, we might want to say the closing balances. So if those balances come from the bank itself, then there's not much doubt again. But if it just comes from the client, even if it's they've printed it or they've scanned it or whatever, sometimes, I mean, things can go a different way. But again, we still ask the client to send us the bank statements. They do send them, but we get the confirmation from the confirmation.com or from the bank. Again, we compare what we have in our Zero, QuickBooks, or whatever, and the bank statements from the supplier, or sorry, from the client, as well as the confirmation from confirmation.com, which they get from the banks. That's basically what we do in that first meeting. There could be other things sometimes which might arise in between, but from a listing which I have, which we go with when we meet up a new client, like we had a new client about 2 weeks ago, and these are the sort of things we were discussing. And it's interesting when you speak to them, especially in a friendly way. Everything will be much more easier. But when you come in as a, I don't know, a military police officer, then you're not doing justice to yourself. But when you come in a friendly manner, in a friendly way, we are all humans. We all make mistakes, that sort of stuff. But we do have a guideline which we need to follow to bring us back. That's why, like, if we are doing charity, we need to know the, say, the SOP. We need to know the regulations and rules to do with the charities. If we are doing other, say, companies, we need to read the Company Act. So a lot of reading is required, and a lot of consultation sometimes is required, so that whatever you are doing is acceptable, is right, is say you are doing statutory accounts. I mean, this is statutory. You are not going to mess around. Yeah, it's really, really important that we are conversant with whatever we are going to produce for our clients. Yeah, that's all I had time for. I don't know whether there are any suggestions or compliments you want to add on. I just want to, again, reiterate that the stages, the 6 stages, from stage 1, the management information systems, is very, very important. Make sure you learn it inside out. And then stage 2, you cannot do stage 2 properly if stage 1 is not done properly. Yeah, the profit analysis, profit and loss analysis, all the data which you use there or which is captured there comes from stage 1. The balance sheet analysis, the cash flows, again, is that stage 1. It's so crucial. Statutory, it's going to go wrong if 1 is not done properly, even 2 is not done properly. Now, when it goes to reporting, what are you going to report if things haven't done prepared properly? You've got to report things which are going to benefit, which are going to be sound. So by using this Moracle formula, by you learning the Moracle formula, you are in a safer place here and anywhere else you might want to work. Thank you. If there are no comments, I think, yeah, we only have 6 minutes to go. If there are no comments, yeah, I say hands.
Yes,
sorry.
Robert.
Okay.
Just a quick one.
I do see 2 hands. So Molai, and after Molai is
just a quick one. After having a client, then going through all this background checks, right?
Yeah.
taking into consideration that, I mean, even the rogues or criminals, they are also working to beat the system, right? If at all you go through all those checks and you found out that, oh, okay, these people, they are credible, we can go ahead working with them. Then after working with them, then later authorities find out that, oh, this company or this business is not doing the proper things. They are not ethical. What will be the consequence for Moracle? And if there are consequences, what is Moracle doing to protect itself from those consequences, apart from doing all those checks?
Okay, thank you very much. Thank you very much, Molai, for that question. Yeah, things like that can happen, but we are under, say, the ACCA. If anything like that happens, we've got to consult ACCA. That is what we did, and this is what has come up. If it's due to negligence, then we are in a bit of trouble. But most of the time, not only most of the time, we do things according to the regulations, according to statute. It's possible to not to find out something. It's possible it could be hidden, but we do try as much as we can. And if it happens, then we'll seek guidance. We can't have all the answers. We can't have all the answers some of the time, but it doesn't happen many times. And if something happens, even if it's not your fault, sometimes what goes out in the papers, they say, oh, that company has gone under, but Moracle was auditing them. It's not, we are not the directors. We go there to do something completely different. But most of the time is put to you. Is put to you that, oh, the auditors didn't do this. The auditors, no, it's not the duties. It's not the auditor's duty. But I do appreciate that question. That's all I can say. We'll go to ACCA, because even when you have a client, and we quite, I'll tell you, we had an issue some time back. We had somebody we are going to audit, but before they produced most of the information, they we found out that there were some relations in the background, and there was some malpractice somewhere. If I don't want to go into detail. So we had to say to them, well, we are not going to continue, and we had to seek advice from ACCA, because we didn't find out everything, though we tried. We do the best stuff which we need to do, which is required. We did. But again, there were other things in the background. And when we found that, I mean, we had to put our hands up and say, sorry, we cannot continue with this. We had not actually started, but we had kind of sent them an engagement letter and that sort of stuff just before we got going. That's when we realized that. Molai, I don't know whether that answers a bit of that, but I can, I can consult much more about it. Thank you very much. Kelvin.
Thank you. Thank you so much, Robert, on this interesting topic, continuation of an auditing. I'm listening to it, and I'm finding it so much interesting in this sense. Now, I like the fact that Molai talked about, situations where you find there's that discrepancy or irregularity, and then, it's hitting back on us. So I just want to bring up something small here about documentation. Right now, technology is taking over. And you find that even as technology is taking over, also cyber crimes increases, and also, so at some point, even the documentations that we go seek, because the work of an accountant it's like you're going, the external auditor is like you're going to redo again the work of an accountant. You break down the figures, and then you go and ascertain the accuracy, find out if there's any misstatement there. Now, and then now you find at some instances, there's some figures that needs to be justified, and you find out that there has to be a supporting document, but it comes out that the supporting documents were doctored, Now, for us, we might not really tell, let's say as the auditor, we might not really tell whether or authenticate, or rather I would ask, how do we mitigate such cases whereby we avoid doctored documentation? For example, in terms of invoicing, you even find a company would get another maybe sister company to supply some items to the main company, but you see the prices are inflated, such things. So and I would want to hear also about the mitigation measures that we can have in place regarding that also. Thank you, Robert.
Thank you, Kelvin. That's a tough question. If I'm sure sometimes when you ask a question, you already have the answer as well. You are putting you on the spot here. Well, what we do, I know Sharon is laughing. I think she's going to help me out here. But what it is we do as much as we can to find out and to gather as much information as we can. And we can only rely on what we have. We can seek guidance from lots of the stakeholders. We can try to find information from different sources, not from only one, to tie up onto one. But if that's what we have, how can you prove that this is doctored? Why do you say it's doctored? If somebody produces that information, this is the invoice here, yeah, and in your head, you might say it's doctored, but how do you prove it's doctored? Sometimes it's not even doctored, but sometimes it could be. So you just need to do a bit more. You just need to ask more information. If you think it's doctored, there must be a reason as to why you think it's doctored. And those are the reasons you are going to give the guy. Okay, so why is this? Why is there Tipex here? Can we have the original? That sort of stuff. And then maybe you can go behind and speak to the other issuing authorities or to the related stakeholders. Because there's always a process. There's always a system. For example, I worked in inventory some time back, and it was such a massive process because you've got to get a quotation before you can put in a purchase order. And then when you put in a purchase order, they've got to send you a pro forma invoice if they are going to send the staff, and then they are going to send a delivery note. And all these must match. And the delivery note, when the goods come in, you need to check the delivery note against the quotation, against the PO, against the invoice, against all those documents. And then they are going to send the invoice because they've sent you the goods afterwards. And then when the goods, okay, before even they send the invoice, the goods have come into store, you've got to check them, make sure this is what we ordered and this is what has come. For example, computers, they use a Mac, but there are different types of Macs. So you've got to go into that detail. Somebody should be there to check each and everything properly so that you don't order a bigger memory and you get smaller memory, that sort of stuff. So if you look through all that system, there must be a system to follow who authorized what, who approved what. If you follow, especially when you realize something might not be right, you go to the full depth of everything. That way, in a way, in one way or the other, or even go to the shippers who shipped the stuff, and that's, you are going to somehow you will catch them. You will find, well, it's not catching. I shouldn't say catching, but you are going to find out that here, this is a loophole. So why is this so? Yeah, that's what I can say to you, Kevin, about that one. Thank you. There's a hand by Miriam.
Interesting session, Robert. Thank you very much. This is very good. That was an interesting question that Kelvin asked. Okay, the goods have been inflated, and you don't know whether that is the correct prices. So there's always, usually when you are going to procure, you should get some 3 different invoices, pro forma invoices or codes that will inform you what's happening, okay, as far as that the item you're going to buy is concerned. And then based on an independent, I mean, you should not have anybody there who is working in the company who will tell you, okay, buy from this company, who will be trying to convince anybody to buy. So you should be as independent as possible, objective as possible, and choose the best option. Okay. So if you are not there, you still suspect that the prices may not be correct, must have inflated, we can still find out how much this item sells in the market. Okay, and then you may be suspicious, like what I would say, we accountants must always be, he uses a word, it means you don't trust anybody. So you may be suspicious, but you keep the suspicion on, probably for a later discussion. In our work as accountants, we are privileged to have ACCA as our support. Okay, so anytime we have difficulty, challenges, problems, issues that comes with work, you can contact them and ask your question. So that's why we are together. We are many people have had experiences, a lot of information there. They can help you to solve some of the challenges you have. In fact, most of them, as far as work is concerned, they've been in existence for 100 years plus. And now we are 250,000. So, you know, that's a big resource that you can rely on. Okay. Then the last thing I want to talk about is about the knowledge of business. If you have any clients, you want to get the knowledge of business of the clients. Like Robert mentioned, there's so many ways. As for me, even if I visit the office one day, I could see the challenges they have as far as accounting or their books are concerned. I mean, I could see, I mean, for me, one day, if I'm there and I sit down and observe the movements, the way things are, I can tell you that this is some of the challenges they have. Okay. The other thing is probably speaking to one or two of them and also be able to know some of the challenges they have. Also visiting their website, okay, and then reading whatever information is there. So always a very good source of information where you can gain a very good knowledge of the business. Before I go, there's one experience I had at my last place of work. Okay, I was the accountant. I should call it the chief accountant, senior accountant there. And I could see the mess in the office. Okay, I could see how people were stealing and everything, but it was cool. So I'll sit to my office, go and buy food items that they're going to cook for us. Somebody will come with an invoice. I'm going to buy 4 boxes of chicken, 3 gallons of oil, so and so, and then 5 bags of rice. Okay. Now, before I got there, the person will come for this money and then go and buy the items and then send it to the store. Nobody will inspect. So whatever she sends to the store, the storekeeper will take it and then put it in the fridge. And so when they cook for us, the meat is very small. The meat is very, very small. So everybody, especially the guys there, will say, this food has no protein. So I had all this and I knew where the problem was coming from. So I never went to the storeroom. I never went there. I didn't even see the storekeeper before. After 1 month I was there, then I heard that the sizes of the meat is now bigger. Okay, so what I was doing was when they bring the invoice that they're going to buy so and so and so, I call the guy in the store and I said, when they bring the items, please don't put it in the store. My guys from the accounts will come and inspect. Okay, so when they said, okay, the items have been delivered, I said, you go to the store, go and see whether the meat is 4 boxes, go and see whether the rice is 4 bags, go and see whether the oil is 4 gallons, like they said. Okay, so it means that this person will not be able to take anything. She has to put, there's a kind of controls I was putting. I never went to the storeroom. A report came to me that things are changing. So okay, we've been blessed with a certain kind of knowledge. I mean, and I've applied this virtually everywhere I find myself. I mean, in the family, I was asked to host an annual party in the family, and I use these things to. I mean, so you could imagine. I mean, people could say, no, this is a different kind of knowledge that you have. So, I mean, we have been blessed. We have what it takes to get things done in order. Thank you.
Thank you very much, Miriam. That's a wonderful story there. And again, it's the controls which we can put in place to mitigate all these issues like Miriam did there. That was wonderful. I think that's it. We have time for Sharon, do you want to say something? You're on mute.
No, Robert, thank you very much though for the brilliant session you've delivered and for what everyone shared. Thank you so much.
Thank you very much, everybody. Thank you and have a good afternoon and see you next week.
Thank you, Robert.